Hey guys, welcome to episode 8 of the Back to Basics series with me and my wonderful fiance, Mike. He's teaching me how to trade. So if this is your first time tuning in, we have all these videos done up in a playlist, so just click back to the first one and you can kind of follow along to where we were and now where we're going. Today we're learning about trends, I guess, so we'll see how that goes.
Okay guys, socials will probably be down here as well, but you know, we're if you're seeing this on my channel, go to Jess's. If you're seeing it on Jess, go to mine. We each do different things. Mine will be more about someone who's been trading for, I don't know, 15, 20 years now, and someone who's just started. So I think that's a cool kind of contrast between those. So, some recap. You remember this chart?
I do.
So this was our support and resistance lesson. And support and resistance, we talked about how, you know, psychology will cause prices to stop at certain areas. They'll cause them to bounce at certain areas. And quite often what happens if a stock moves through, it'll come back and bounce. And we had a big, long discussion about the psychology behind that and why it happens and why it's a repeatable phenomenon. So as Jess said, if you're just starting here, go back and check those out. And then the lesson before this one was a lot of fun for you, and it was all about statistics. So I basically kind of showed in as pared down as a way as I could on the studies that have been done to show why stocks trend and why it makes sense to follow the trends and why there is a mathematical and a statistical benefit to that. So now that we've talked about that, so you know, that was to prove that trends exist and that there's something that can be found and there's something that can be rode. So here is kind of the beginning of a trend without stock price. So it's pretty easy to say, okay, what is a trend? And most people, right, if it's going up, if it's a trend, it's going down, it's a trend.
Right.
There's a couple ways to actually define this, and one of them is by connecting the peaks and the troughs. So when you see a P, that's just the peak of that
Squiggly line.
that squiggly line,
Okay.
and then the bottom is a trough. So if you're drawing, and we're going to show you this a little bit in a second, but if you're drawing a trend line, we're going to go to actual live charts, take a look at the markets, and start incorporating that in. Then you'll notice that these kind of waves exist, right? So even though a stock is going down, it doesn't usually go straight down. It goes down like this, and same with going up. So kind of the rule of thumb is if you're trying to identify the trend, draw a line across the peaks if you think it's a downtrend, or across the troughs if you think it's an uptrend. And as the thing comes down, you know, as long as that line exists, then that's the form of a trend that you're in. It can shift one way or another, right? A higher up line would be a very strong trend, and a more horizontal line would be a very weak trend. But it's a quick way to say, okay, this is the trend of the stock. And kind of the first rule of trading for new traders, you and the guys out there, is to trade with the trend. And that's what was that whole normal distribution rant that I hope hit home that someone talked about, is the trend is your friend, as we call it.
No, what was the full...
The trend is your friend till the bend in the end. And this right here
welcome.
Would be the bend in the end, and right there would be the bend in the end. Because nothing exists in a trend forever. And just think about it with fashion, right? Someone wears some stupid kind of pants, and then everyone goes, oh, that's great. And they go out and they buy those kind of pants, and they keep going, and they keep going, and they keep going. But at some point, you know, they become bell bottoms, which don't exist anymore, and then maybe...
Coming back, though.
Right? So then you would want to wait as a trader to see if that is a trend, and if it is, you know, you can ride it for a period of time. There's three kind of trends. Three kind of trends. Up, sideways, and down.
Okay.
And then this is just how you draw the lines. You're showing that an uptrend is just, again, the troughs, and the downtrend is the peak, and a sideways trend is usually just a sideways moving channel. And what we try to do as traders is avoid those sideways ones at all cost.
Why?
There's just not as much money to be made there. So think about this as a stock price, right? Is there more money to be made buying down here and say that's $10 and selling up here and that's 10, or if this is just bouncing around in like a $2 range? Right?
Okay.
What would you rather? And you got to remember, every time you press the button to trade,
costs you money.
It costs you money.
Yes.
Now, commissions are free, but then there'll be slippage and HFT fee. Anyway, anytime you click that's just for people who would contradict me and say there's no commissions anymore. It still costs you money. We'll go over that down the road. But so is it better to find a trend, buy it, wait until that trend line breaks that little red dot and say, okay, I'm out, trend broke? Or is it easier to buy and sell and buy and sell and buy and sell and buy and sell?
Right.
So here is it on an actual chart of UPS probably a million years ago, 2010. I found that on Twitter. And you can see it's, again, everything I show you picture-wise is going to be prettier than anything that I show you that's real-life data.
Right.
But you can see that every time the stock came down, pushed up, came down again, how this high is higher than this high, and how this high is higher than this high, right? And this high is higher than this high, very slightly, or lower than this high, very slightly. And this high is higher than that one, and so on and so forth. So that, if you looked at the textbook definition of an uptrend, it's, again, this wave. And when the highs are higher than the ones before it, and the lows are lower than the one before it.
Okay.
Because you got to remember, it doesn't necessarily have to be going up or down. Like, it could make a higher high, and then a lower low, and then an even higher high, and an even lower low. Like, it could be, the wave could be expanding out.
Yeah, okay, the squiggle could be larger.
Right, or it could be shrinking.
Okay.
Right? You see how it kind of happened here a little bit. And these are geometric patterns, which we'll go over in probably the next lesson or the one after. This is another real live data from the 90s, basically, but this is just EMC. And you can see how even when you're drawing the trend line, sometimes the trend moves. You can see how between point 1 and 2, you had that trend. And point 2 and 3, the same trend line occurred. And then point 3 and kind of 4, the trend line accelerated. So you had to draw a different trend line. And kind of same with on the way down. And then here is Google. And here is another way to draw trend lines. And it's kind of faint, but you can see the little blue line that's connecting everything. Mm-hmm. That is what we call a moving average, which we'll go over in a bit. And it essentially draws, in a way, a trend line for you. And all it is the average of the last handful of prices. So this is a way that the system can kind of draw a trend line. You can see as Google sold, it basically put the price right above it. And then as Google kind of rallied through here, it put the price right below it. And then when Google was moving sideways, so was the moving average, which is essentially just an average of the last. This is an 8 period, so it takes the last 8 trading days and it averages out that price and it says, here you go, and then it rolls that forward.
Okay.
And then we can see that you can play here on Urban both sides of the trend. You see how there was a nice clean trend up? Mm-hmm. You can see that. You can almost imagine drawing a line under those troughs. And then on the way down, you could see you can make it as well. So if you...
Now, is there also a sideways one there at the top?
There is, yeah.
Okay.
So say, for example, you missed the first little bit of this trend. So you kind of missed this little bit. But then you got in as the trend continued. You still had a great trade out of it. And then when the trend turned sideways, you just got out. You said, I'm going to wait to see what happens next. And then say you even missed the first little down move, but then caught it as that trend continued. You still had a nice trade. And that's Urban Outfitters, which is a retailer in the States. So there's trends on both sides, and you can see how much easier it would be to have bought Urban Outfitters as it broke out there and just rode it up, and then shorted Urban Outfitters somewhere in this area and just wrote it down, as opposed to trying to buy and sell and buy and sell and buy and sell through there.
Right.
So this is going to be your first, and I hope this works. It does. Kind of look at the live trading platform. And this is one of my accounts that I have here. And we're just going to show you how to draw a simple trend line, and that will be a bit of homework that you're going to start with. We're going to set you up with your own account, and you're just going to go through a couple charts, draw some trend lines on them, and we'll talk about how to develop that into a trading strategy next go, because you're almost there. But so this little line up here, this sideways trend, right? That's your trend line. You click on that, you see how my cursor changed.
Okay.
So you go to wherever you want to start the trend, and you click, and then you see how it's just drawing a line behind. And again, this is where the art comes in, right? Whether you include that little bit or whether you exclude it, that's going to be entirely up to you and however you do it. But you see how you could draw a trend line here, and at any point that it bounced off the trend line, if you had bought, that would have been a good buy.
Right.
And same on the way down after the coronavirus. If we draw a trend line here connecting the peaks, right? Because on the way down you connect the peaks, and on the way up you connect the
Underside.
the troughs.
Yes.
You can see that even right. So you need 2 points mathematically to make a line, right? So you have the point up here, and you have the point here, and maybe, and by the time this video is released, we'll know maybe that was a third test of the trend line. So that would have been a way to trade this stock with the trend. Right now the trend of Apple is down, so same with the rest of the world, sadly. So if you had drawn this line in advance and you had went into the today and you had in your notes that if Apple gets to this trend line, I'm going to take a short.
Okay.
You could have taken a short right here. You would have known you were wrong if it broke this trend line the same way it did here.
When you say trend line, are you like associating it with a price?
Well, the trend line is the actual orange line.
Right. So when you say when it broke trend line, so you've gone ahead and drawn these out on charts or something like that? Like, why would I be opening an Apple stock and just being like, okay, if it breaks trend, I'm going to buy it. You know what I mean?
Well, it's a good question, and that's a little bit ahead of, like, I'm just going to give you a handful of stocks to look at, but that's part of a trading plan. So the first part of the trading plan is always, what am I going to trade and why? And that's where Trade Ideas' real power is, and that's where Trade Ideas comes in, is because they scan the market for whatever you want. That's the beauty of it. So if you say, we talked about candlestick patterns, right? For example, if you liked hammers, you could say, okay, Trade Ideas, show me all of the hammers in uptrending stocks, or in this one, the reverse hammers in uptrending stocks.
So if you didn't have a program, if you didn't have a program, would you be scanning stocks yourself?
Yeah, usually what people that don't have a tool to do, what they'll do, and what I did before I started with using Trade Ideas, which was like 12 years ago, is I would sit down every day and I would just read the news. I'd say, okay, what stocks are in the news?
Okay.
And it was a laborious, time-consuming process because I'm sitting there on Bloomberg or Wall Street Journal or whatever.
Okay.
And I'm reading all of the news, and then I'm going to the charts, and then I'm saying, is this a chart that I'm even interested in? Because as we'll talk about more, and we talked about a little bit before, is technical analysis supersedes news and chart analysis there, because what we're trying to do is we're trying to predict the movement of the people.
Right.
So, step one was to go find the news, and then step two was to go through, I'd make a list of 30, 40 stocks that day, and I'd go through every single one of their charts and see if it was something that met my trading plan, because you'll have a little trading plan written up that say, I look for charts that do this, and I'm going to buy them if they do this, and I'm going to sell them if they do this. So what happened was when Dan invented Trade Ideas, because he was a trader doing the same thing I was, he said, this is a pain. So he went out to a buddy of his who was a programmer and said, I just want to show me stocks that are both in the news in some way, people are talking about them, and they're doing whatever it is that I'm looking for. And then people really liked it, they wanted to buy it, and he made Trade Ideas. So that's what we're going to... So when it comes, I guess, the long-winded answer to why you would look at this stock is we're going to set up certain criteria, and it's going to evolve based off whatever you like. But if there's a certain candlestick that you like...
Okay.
For example, for this one here, you may have been alerted on this day that was a hammer. If, for example, you ask Trade Ideas, show me hammers on stocks that are trending higher.
Okay, so now I know we're kind of ahead of ourselves here. But will it... Okay, say I was looking for, like, a doji.
Okay.
Okay, so say that's...
First, hold on. Impromptu test. Point out 2 dojis on this chart. Pure play dojis.
There?
Yep.
There?
Yep. I say 2?
Yeah.
Oh, good. There you go. Okay, so say you like the doji.
Okay, so say I liked the doji. So if I'm running a scan, how many charts are they going to come back to me with?
Depending on however many you want. And I actually have something. We're going a bit off plan here, but I think this is great. No, this is great.
Sorry.
No. This is perfect. This is why we're doing this. But this is my nightly scanning layout. And you probably see me all the time on the couch going through this. And it actually finds dojis. So these are, let me find one that looks perfect, but it will find, you see right here, now this is a gravestone or a dragonfly doji, but it will find the dojis. But what you can do is you can then filter it further. So for example, with Apple, we were saying AAPL. You could not only say, show me all of the dojis, but you could say, show me the dojis of a stock that's in an uptrend that people are talking about in the news, and then any other criteria you want as well.
Okay.
So you could get to the point. So my hope is by the end of this, you're going to have like 2 scans, one for stocks going up, one for stocks going down, and they're going to give you 10 results each. So you're going to hit the down button 20 times a night and just build your list of stuff. And then just to go one step further is then you're going to be done because Trade Ideas has an auto trading system. So what you're going to do is you're going to tell the system, because again, after all of this, I'm hoping you go back to work. Then you can say, I saw the doji, and that's what it found.
I don't want to go back to work.
Well, get real good at trading, and we'll talk. So yeah, you'll do the scan. You'll say, here's the doji that I like. We'll go over geometric patterns later. Maybe a geometric pattern that I'm interested in. It's in an uptrend. I understand how the company works and how it makes money. Therefore, I'm going to buy it. Then I'm going to hold it a few days and then sell it. Once you've determined that that's your trading plan, you can just tell Trade Ideas to do that for you. Just all of it. And then you're done. Right? And then it will go, okay, I'll buy it tomorrow if it X and Y and Z criteria occur, and I'm going to hold it for 5 days, and then I'm going to sell it. And if, we'll put a stop loss so that if you're wrong, it will not cost you much, and you can put a profit target. So if you're right, it will make you a bunch. And that's what we do. That's kind of the crux of it. But so there's your first kind of intro to charts. After maybe a lesson or two, you're going to get your own cloud computer and just start hammering away. For now, I'm just going to give you this and a list of stocks, and then you're just going to draw some trend lines.
Okay.
That makes sense? Yeah. So that is this lesson. Again, follows, likes, subscribes, thumbs up, hearts, stars, I don't know, whatever the hell else. Share it around. Tell your grandma that this is great and that she should watch it too. And leave nice comments for us. Is that a good enough of request? Okay, I think that's it. No questions?
I don't think so.
Okay. We'll talk to you guys next week, probably.